Do dividends count as an income towards your mortgage application? As a limited company director, not only do you pay yourself a salary, but if you've got a profitable business, you're also going to be paid dividends. And a lot of questions we get asked from limited company directors is, can I use these dividends towards my income when applying for a mortgage? My name is Anthony from Bolt Mortgages, and if you're a limited company director and want to find out more details about the house buying process, don't forget to press like and subscribe now. Firstly, we need to look at how lenders assess your income when you're a limited company director. So every lender has different variances when you do own your own business. But the general rule of thumb, most lenders will look at your director's salary and also the dividends that you've paid yourself. What they would look at with the average lender is they'd look at how much your salary and dividends have been over the last 2 years, and they would average that out to calculate how much your income would be. However, although dividends can be used towards a mortgage application, if you're speaking to the correct lender, they can not only use your director's salary, but they can also use the net profits that the business has turned over, even if you haven't paid it to yourself via a dividend. The reason the lenders usually look at the last 2 years worth of dividends is they want to make sure that the money that you've paid yourself via the salary and also the dividend method, they want to make sure that it is not putting the company at risk and it's still more than sustainable for the company to run, pay its expenses and be profitable, even if you have withdrawn huge amounts of money from the business. If your dividends are deemed as sustainable and they can see that there's been a steady increase or the amount has been very similar, the lenders will be more than happy to use that as part of the mortgage application process. On the other side, however, if you're using a lender that would assess your director's salary and also your dividends that you've withdrawn from the business, and your dividends have decreased year upon year, what may happen is rather than looking at the average of the last 2, they may just look at the most recent year and use that to calculate your affordability. So in summary, dividends can be used towards your mortgage application process. However, there needs to be a long-standing history of them, of usually in the region of 2 years. But there are lenders out there that can look at your 1 year's most recent accounts, but it limits the amount of options that you've got when you're looking at your director's salary and also your dividends. But on top of the director's salary and dividends, again, there are businesses that if you want to maximise your borrowing, will allow you to look at the net profit that the business has turned over rather than what you've actually withdrawn from the company. My name is Anthony from Bolt Mortgages, and if you want to find out more details about buying a house as a limited company director, don't forget to press like and subscribe now.